It's the first edition of Business Incorporated for the week, and it's great to have you on the show. I am Bisi Adebayo. Today on the program, this year's edition of the Africa CEO Forum kicks off in Geneva, Switzerland, with investors and policymakers from 40 Africa countries in attendance. Plus, the Monetary Policy Committee of the Central Bank of Nigeria begins its second meeting for the year. And the Egyptian government targets a growth rate of around 5% for the 2017-18 fiscal year. Well, let's begin the show now. This year's edition of the Africa CEO Forum has begun in Geneva, Switzerland, with investors and policymakers from 40 African countries attending. Themed Shaping the Future of Africa, the fifth edition of the forum looks to discuss the economic and industrial challenges facing the African continent. But the next 2 days of the forum will also be dedicated to the development of the private sector in Africa. Of course, Channel's business editor Bolsin Omofaye is in Geneva and will be talking more about the forum in the course of the program. In the meantime, the Monetary Policy Committee of the Central Bank of Nigeria begins its second meeting for the year today through till Tuesday. At the two-day meeting in Abuja, analysts expect the committee to hold rates at the current levels. Meanwhile, at the opening of the Monetary Policy Committee retreat over the weekend, the CBN, Ministry of Trade and Investment, and the Ministry of Finance agreed to collaborate more on policies and engender growth in the economy. The second meeting is coming on the heels of S&P Global Ratings, affirming its B, long, and short-term sovereign credit ratings on the Nigerian economy. At the January 2017 meeting, the MPC left all key rates unchanged. Well, let's hit the markets now, and we begin here in Africa, where the oil share index was trading in the positive territory at midday, up 0.43%. The South African market was also up 0.43%. In Egypt, the market index is 0.02% lower as the country's deputy finance minister announced that new stamp duty on stock exchange transactions will come into effect in May and include for the first time a 0.3% levy for investors acquiring more than a third of the company's stocks, while the Nairobi index was up 1.48%. And in the Middle East, the markets are mixed at intraday as the Abu Dhabi index is up 0.87%. Dubai's index was down in a slow early trade as it completed its upgrade to the FTSE Russell Secondary Emerging Market Index, while Saudi Arabia lagged on profit taken in the insurance sector. In Qatar, the second phase of the FTSE upgrade took effect from the opening, with 20 of the 22 companies selected in September 2016 seeing their investability weights doubled. Saudi Arabia's index was down 0.3% in the first half hour as most insurance shares, which had risen strongly on Sunday, retreated. Over now to Europe, where the markets opened the week lower as investors digest the impact of the G20 communique on global growth. Euro area finance ministers are gathering for a Eurogroup meeting today. Well, let's bring in DWTV Channel's TV financial correspondent at the Frankfurt Stock Exchange, Orich Barth, to talk more about the market. Thanks for joining us, Orich. Well, the G20 communique, which notably avoided its usual pledge against protectionist policies, is in focus today. What is the talk concerning this in the markets, considering that it's coming just 2 days after U.S. President Donald Trump hosted the German Chancellor Angela Merkel?
Yeah, I spoke to a strategist on that this morning, and he was basically indicating that he was in shock. It is the beginning of a new era, he said, an era which points maybe towards the end of free trade, or at least a big challenge to free trade between Western countries, and China becoming more important in this context. People are very alarmed at what happened over the weekend there, both at the G20, with protectionist tones in the final statement, no mention of supporting, confirming the idea of free trade as in years past. And then that icy reception of German Chancellor Angela Merkel by Donald Trump in the Oval Office. those pictures, I think, made more of an impression than all of the other events connected with Merkel's visit. But this press conference at the end also disappointed the people here. They fear for a good U.S.-German relations, especially trade relations, of course, from the view of the financial markets. But the overall political repercussions, of course, are also something that people know here at the stock market how important they are.
Euro area finance ministers are gathering for the Eurogroup meeting. What tops the agenda for this meeting?
I think up until about an hour ago, on the agenda was mainly aid payments to Greece, how to go along with those. Greece needs money. The final decisions have not been made. Also, the aftermath of that U.S.-German weekend, of the G20 weekend here in Baden-Baden, with those trade issues being a big worry. But about an hour ago, Theresa May made official that she was going to serve notice to the EU that the United Kingdom will want to leave the European Union, the Brexit. And I think that will probably take precedent over all the other issues. The Eurozone finance ministers will want to discuss this development. Maybe until now, there were still a few hopeful people who said, well, maybe they'll pull back at the last moment and not be able to agree on it, and it will spare people a lot of uncertainty, perhaps a lot of damage to the economy. But now it's a certainty, and the EU, the Eurozone ministers will be certain to try to plot a way forward in this.
All right, before I let you go, let's talk about news coming from Germany's largest lender, that's Deutsche Bank, saying that it's issuing 687.5 million new shares to raise about $8.6 billion. Can you talk to us about this and what the investors' reaction are?
Yeah, the investors were expecting this, of course. 8.6 billion is a major figure. The share is taking a hit nonetheless, and people are putting this up to arbitration, that is, selling old shares and getting a hold of the new ones, and perhaps trying to make a little bit of a profit from that, or lessening the loss. The Deutsche Bank share is taking a hit today. It's going down by over 3%. Doesn't sound much, but if you look at the DAX behind me, it's going down by only about 1/4%. So the Deutsche Bank share by far taking a hit today on that. Still, people, when the announcement came that there were to be new shares to be sold, it was accompanied by news on the strategy, news that people had been waiting for a long time. Among others, what's to become of the Postbank, that huge private, overall private consumer bank with millions of private customers. The decision had been made now that it will remain within the Deutsche Bank Group. Decisions like these somewhat mitigating the effect of a capital raising issue, which always waters down the value of existing shares, and that's always bad news for the market.
Thank you very much, Ulrich, and do have a wonderful day ahead. Ulrich Barth is DWTV Channels TV financial correspondent at the Frankfurt Stock Exchange.